700%.
Yeah.
I want you to sit with that number for a second. In finance, we get excited about 20% growth.
Right.
If a tech giant posts 50%, we call it a revolution. But 700%, that usually means one of two things.
Yeah.
We're looking at a penny stock that got lucky, or we're witnessing a fundamental shift.
And in this case, it's definitely not a penny stock, not luck.
Exactly. We aren't talking about some crypto coin or a mining startup. We are talking about a company that just posted a 700% year-over-year revenue increase for 2025. And the market? Well, if you've been watching the ticker IBRX, Immunitybio, you know the market is absolutely losing its mind.
It's the headline of the week, no question. The stock has rallied for, 8 consecutive days now, leading right into today, Tuesday, January 20th, 2026.
8 days, straight up. That's a vertical line on a chart. And year-to-date, we're sitting at roughly a 40% gain.
That's right, about 40% in less than 3 weeks.
And here's the thing that really catches my eye and why I wanted to do this breakdown today. Usually in biotech, you get these huge pops because of some binary event. A clinical trial succeeds, a mouse didn't die in a lab, and the stock doubles on pure hope. But this feels different.
Yeah.
This doesn't feel like a hope rally.
You've hit on the key distinction right there. This is not a clinical trial pop. This is a commercial execution story.
No.
The market is waking up to the fact that Immunitybio has effectively transitioned. They're not just a research lab anymore.
Yeah.
They are a commercial entity printing over $100 million in revenue. That changes the entire risk profile.
It changes how Wall Street models them. It changes who's buying the stock. So, welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we are looking at Immunitybio.
And listen, our goal here is to give you the signal, not the noise. If you find our talks useful, please consider subscribing, liking, and commenting underneath. Let us know if you're riding this rally or if you're watching from the sidelines thinking it's too hot to touch. We really want to hear from you.
So maybe we should break down where that 700% number actually comes from, because the hard data here is, it's fascinating.
Please do, because when I see 700%, my skeptic brain immediately goes, okay, did they sell 1 widget last year and 7 this year? Is it just a base effect?
It's a fair question, but the scale here is much larger. We're looking at a real financial inflection point. Immunitybio released their preliminary 2025 product revenue, and it hit $113 million.
$113 million.
Right. And to give you some context on that growth curve, in 2024, that same number was just $14.75 million.
Okay, so that's the math. That is exponential. It's not a statistical quirk. That is massive, massive adoption.
It is. And what's so critical here is the momentum within the year. It's not like they made all that money in January and then flatlined.
Right.
Q4 of 2025 alone brought in $38.3 million.
So the ramp is accelerating. They're exiting 2025 at a much higher run rate than they started it.
Exactly. It shows the adoption of their lead product is speeding up, not slowing down. And if we look ahead, the future guidance, the analysts, who are usually pretty conservative, they're forecasting 2026 revenue to nearly double again.
Wow.
They're looking at $218.35 million for this year.
So we go from 14 million to 113 to a projected 218. That is the kind of chart that, growth investors just dream about. But let's pause on the numbers. What's the engine? What are they actually selling?
The product moat here is a drug called ANKTIVA.
ANKTIVA. Okay.
And the science behind it is really what separates Immunitybio from, the rest of the crowded oncology field. It's an IL-15 superagonist.
Okay, unpack that. IL-15 superagonist. Pretend I'm not a biologist.
So in simple terms, it activates your body's own immune system, specifically the natural killer cells, NK cells, and T cells, to go and attack cancer. But here's the key differentiator. Think about CAR-T therapies.
Right, we talk about them a lot.
Amazing therapies, but they are grueling. They usually require hospitalization. They require chemo to wipe out your existing immune system, what's called lymphodepletion.
Right, it's a heavy lift for the patient. You have to basically nuke the village to save it.
Exactly. Ankiva is different. It's an outpatient immunotherapy. You don't need that heavy chemo prep. You don't need the hospital stay.
Outpatient, so you just drive to the clinic, get the treatment, and go home for dinner.
That is the reality.
That's massive. For quality of life,
It's huge, and right now it is just dominating in a very specific, very tough indication. BCG, unresponsive, non-muscle invasive bladder cancer. I know, it's a mouthful.
Yeah, NMIBC, right.
Right. These are patients who've tried the standard of care, BCG, and it just stopped working. Before ANKTIVA, their options were really limited, often, removing the bladder entirely.
So ANKTIVA is saving organs and saving lives.
And doing it on an outpatient basis.
That explains the revenue ramp right there. If doctors can prescribe this without admitting a patient to the ICU, adoption is just going to be so much faster.
Precisely. And the footprint is expanding. This isn't just a U.S. story anymore. They have approvals in the EU, the UK, and there's a really interesting development happening in Saudi Arabia.
Oh, really? Why Saudi Arabia? Usually we look to Europe or Japan for the big regulatory wins.
2 reasons. First, they got accelerated approval there. But not just for bladder cancer. They also got approval for non-small cell lung cancer.
Hey, lung cancer, that's a massive market compared to bladder cancer.
It is. And getting that accelerated approval in a market like Saudi Arabia creates this strategic beachhead for the whole region. It validates the platform for other indications.
Okay, so we have the product, the revenue ramp, the global expansion. But let's talk about the bank account. Because a biotech growing this fast is usually burning cash like a bonfire. You can have great revenue and still go broke. What's their financial health look like?
You're right to ask. They aren't profitable yet, which is, standard for this stage. But the losses are narrowing significantly. In 2024, their losses were down 29%.
Okay, so moving in the right direction.
And crucially, their cash position. They ended Q3 of 2025 with $257.8 million in the bank.
$257 million, is that enough?
It provides a runway of about 3 to 4 quarters.
Which in biotech time is decent, but it's not exactly a fortress.
It stabilizes the ship. It means they aren't desperate for cash tomorrow. It gives them time to let that revenue ramp up, which could reduce the need for massive dilution down the road.
Okay, so fundamentals are screaming growth. Let's pivot to the vibe check.
Yeah.
How does the street feel about this? Because sometimes the numbers are good, but the mood is just bad.
Not in this case. The quantitative mood is strongly bullish.
Strongly bullish.
If we look at the sentiment analysis, specifically the Alpha Vantage scores, it's almost a clean sweep. 10 out of 10 recent major headlines are scoring as bullish.
That is rare. Usually you have at least one contrarian article out there.
Not right now. And I think a big part of that is this narrative shift. Investors are starting to use the term immunotherapy 2.0.
I've been seeing that pop up. Immunotherapy 2.0. What does that actually mean?
Right. So the first wave was the checkpoint inhibitors, Keytruda, Opdivo, huge drugs. But now investors are looking for the next wave. What comes after that? And with ANKTIVA offering this outpatient, low toxicity profile, people are pointing to Immunitybio and saying, this is what 2.0 looks like.
So effective, but easier on the patient. The evolution of care.
Exactly.
So the algorithms love it. What about the humans, the analysts?
The consensus is a strong buy. We have 4 major firms covering it, and they are all leaning heavily into the buy side.
And the price targets. The stock is trading around $5 right now, isn't it?
Correct. The average price target is sitting at $11.50.
Whoa. So even after this 40% rally we've just seen, the average target implies over 100% upside from here.
That's the average. If you look at the high water mark, DeBoral Capital has a target of $24 for January 2026.
$24. That's a nearly 5x from where we are right now. That is aggressive.
It's aggressive, but it's based on that revenue ramp. If they hit that $200 million mark in 2026, the valuation models start to look very, very different.
Okay, what about the technicals? You said the stock's been rallying for 8 days straight. That have to be a breakout.
It's a classic technical breakout. The stock is hitting new 52-week highs, trading in a range of 438 to 571. But the real story isn't just price, it's the volume.
Volume tells the truth.
Exactly. We're seeing unusually high trading volume, over 100 million shares changing hands.
That's not retail traders on their lunch break.
No, that is institutional accumulation. That's big money buying the breakout. And there's one other technical note I find fascinating. The beta.
The beta. Remind our listeners what that tells us.
It measures how much a stock moves with the broader market. A beta of 1 means it moves with the market. Immunitybio's beta is negative 0.04.
Negative, so it's completely uncorrelated.
Effectively, yeah. It's moving totally independently of the S&P 500 or the NASDAQ. It's moving on its own news.
Which is great for diversification.
Yeah.
If the market tanks because of interest rates, this stock is just dancing to its own tune.
Exactly.
Okay. I'm going to put my skeptic hat on for a minute.
Yeah.
We've talked about the growth, the analysts, the breakout. It sounds perfect, but Nothing is perfect. What can go wrong here? What's the bear case?
It's a fair question, and there are real risks. This is definitely not a savings account.
Let's start with the cash. You said they have $250 million. That's good, but they lost heavily in 2024.
Right. They burned $413 million in 2024. Even with the revenue, they're still losing money. So that 3 to 4 quarter runway is comfortable now, but what happens in late 2026?
Exactly. If they're not profitable by then, they have to raise money. And raising money means dilution. My slice of the pie gets smaller.
That's the primary overhang. Investors are constantly watching that cash burn rate. If the revenue doesn't ramp fast enough, a capital raise is, well, it's inevitable.
And then there's execution risk. We're talking about a lot of future growth.
Yes. Everything rides on the BLA, the Biologics License Application for new indications. They have to expand beyond just bladder cancer to justify that $24 price target.
And clinical trials are, notorious for delays.
Right. They have a major trial running now called QUILT-2.005. If that trial faces enrollment delays or if the data isn't sparkling clean, the stock could tumble. In biotech, a delay is almost as bad as failure because of the cash burn.
So if QUILT 2.005 hits a snag, the momentum just dies.
Precisely.
Okay, that's the scary stuff. Now, counter me. Why should I look past the cash burn? Why trust the execution? Give me the bull case rebuttal.
The rebuttal really comes down to clinical superiority. It's not just about good data. It's about best-in-class data.
Give me an example.
Okay, let's look at the QUILT-106 trial. This was for lymphoma and Waldenstrom's. They showed 100% disease control up to 15 months.
100%.
100%. In oncology, you don't use words like cure, but 100% disease control is about as close as you get to a perfect scorecard. That's the kind of data that makes doctors change how they prescribe.
And that goes back to the moat you mentioned earlier.
The moat is the quality of life. The ability to treat patients without lymphodepletion, without destroying their immune system first, that creates a massive advantage. If you're a doctor with 2 options, option A needs a hospital stay and makes the patient sick before they get better, and option B is an outpatient shot with similar or better results. Which one are you choosing?
You choose option B every single time.
Exactly. That's the commercial moat. You aren't just selling a drug, you are selling a better experience.
What about the valuation, though? Is it expensive?
Well, it depends on how you look at it. A price-to-sales ratio of, 33 is high for a traditional company. If this were a car maker, you'd run. But for a biotech growing at 700%, it's arguably justified. Some discount and cash flow models suggest the stock is trading at an 85% discount to its fair value.
An 85% discount. So the model says the stock should be worth way more if they hit those targets?
Assuming they hit the targets, that's the key. But with the Saudi approval and the U.S. ramp, the probability of hitting them is going up every day.
It's a classic high-risk, high-reward setup, but the reward side is starting to show its hand.
It is.
All right, let's look forward. For listeners who are maybe holding, maybe looking to buy, what are the dates to circle on the calendar for the next few months?
The biggest date is March 2nd, 2026.
Earnings day.
That's the earnings call. The market has seen the preliminary numbers, that $113 million, but they want to see the audited confirmation. And more importantly, they want updated guidance. They want to hear the CEO say, yes, we are on track for $218 million.
If they miss on guidance or sound hesitant, the stock will get hit.
Absolutely. And before that, throughout Q1, we're looking for updates on that QUILT 2.005 trial. We want to hear that enrollment is complete.
And any news out of the Middle East?
Yes. Look for potential label expansions in Saudi Arabia or other partnerships in the region. They've got that beachhead now. We want to see them use it.
Okay, so March 2nd is the big one.
Correct.
Taking a step back, this really feels like a classic commercial inflection play. We see this with biotechs. They spend 10 years burning cash, doing the science, and nobody pays attention. Then the science works, and it becomes a sales game.
And that's the hardest transition, but Immunitybio seems to be navigating it. The science is proven, now it's about selling it.
Just about selling it. Sounds simple, but it's everything.
It is.
So what does this all mean for you listening? We're looking at a company that is just defying the sector trends. Other biotechs are struggling for funding. Immunitybio is ramping revenue at triple-digit rates.
And the technicals are breaking out, the analysts are chasing the price up, and the product is saving lives without the brutal side effects of older treatments.
But remember the risks. Cash burn is real, and clinical trials are never, ever a guarantee.
Always true.
So that's the breakdown on Immunitybio. Remember to check your own risk tolerance. This is a volatile name, even with that low beta. Do your homework.
And keep an eye on that March 2nd date.
Absolutely. If you enjoy this analysis, if you like digging into the numbers behind the headlines, please hit subscribe. We do this every day. We'll see you tomorrow.
Thanks for listening.